I'm mentioning only eligible ITC you can take for the banking company also, not the total ITC. After reducing the block credit, then 50% of that eligible ITC has to be taken as ITC. Then the balance 50%, which is permanently blocked, permanently ineligible, has to be fed in 4B1. Then 42 is the common credit, reversal of the common credit. Suppose you are engaged in supplying exempt supply and also you are engaged in the taxable supply. So for the common credit, you are entitled only on the proportionate basis. So you have to give the amount ineligible common credit. Ineligible, not the eligible common credit. You have to give the ineligible common credit here in 4B1. In addition to that 38, you have to give the ineligible common credit. Then reversal for capital goods. 42 and then 43 are similar. 42 applies for inputs, whereas 43 applies for capital goods. Whenever the capital goods are used for making of the exempted goods and then for the taxable goods. So, for example, milk is the exempted good. You are purchase the machine which can be used for milk and then for making ice creams. So that should be a proportionate eligibility for ITC for capital goods. So you have to give what is the amount, eligible amount? No, you have to give the ineligible portion. Ineligible portion has to be given in 4B1. Then block credit. Block credit. You will be aware of the block credit. What are the block credit? So, for example, car, then any ITC for the buildings, construction of the building, civil structure, food and beverages, renting of the cab. These are all block credit under section 17, subsection 5. These items have to be given specifically in 4B1. So this is an important aspect because this is the amount. They say we are not taking the ITC. That is enough. No, it is not the case. Why? Because of the changes in the system of the GST 3B filing. Then 4D, table 4D. See, 4C is the amount. What is the amount that is coming in the 4C only goes to the electronic credit ledger. So amount the electronic credit ledger you can use to set off your output tax liability. So only eligible credit should go to the 4C. That is the basic idea. If you keep that basic idea, then it will be very, very useful. So 4D, the change in the heading is also very, very relevant. 4D heading in GST 3B has just maybe a small change. Ineligible ITC to other details it has got. So from ineligible ITC, now we are going into the topic is called other details. Why? So already I mentioned ITC reclaimed, which was reversed in 4B2. So you make a claim in 4A5 and then reversing it, and then after that, after reversing that, if you are going to claim it again, then it has to be mentioned in 4D1. If you are not going to mention in 4D1, the balance that is coming in the electronic credit reversal and reclaim statement will show a wrong figure. So at the time of claiming, reclaiming in 4A5, the same thing has to be clearly mentioned in 4D1 also. See, then again, 2, ineligible ITC under section 16.4 and then ITC restricted to place of supply provisions. So these are all will not come into your GST 2B at all. See, suppose your supplier puts an invoice relating to say 2023. Even though he is putting it in GST 3B, that will not be populated in your GST 2B. So that amount, even though it doesn't come there, you have to put it here. That amount is not populated, but still you have to put it here. Then to place of supply provisions. So, for example, you are going a tour to or a business visit is taking place to Delhi, and then there the supplier will be giving the lodging services. They will be giving a GST invoice that will have only CGST and then the SGST component. You cannot take the ITC for the same. that should be reported in 4D2. But that is not relevant for the ITC calculation because that will not come into the 4A5 only, 4A5. So, though the system is implemented from August 22, 2022, GST 3B returns are not filed as per the new norms. What is the new norm? I would say new norm, the basic or the starting point for claiming ITC is the 2B only, GST 2B only. You have to completely ignore the amount that is getting populated in your books of accounts, in your tally or your SAP or whatever the ERP you are using. It is not relevant for the GST 3B returns. Though you may have internal reconciliation, your claim should be only strictly as per the amount populated in GST 2B. If you are going to claim an amount ITC in excess of what is populated in GST 2B, there will be a DRC 01C notice automatically coming for you. So your starting point is the GST 2B. So do not claim any amount in excess of this amount coming in the GST 2B. So that is the basic idea of the changed system of filing the GST 3B. So 4D1 ITC claim which was reversed in 4B2 in earlier tax period. So what is amount 4D1? You must have reversed that ITC. 4B2 you will be reversing. So that amount when you are reclaiming, then you have to say ITC reclaim. So that only the electronic credit reversal and then reclaim statement. So first you are reversing. So this statement captures the reversal and then the reclaim. So this is the reason for introduction of the electronic credit reversal and then reclaim statement. And if you are asking me, what is there any legal backing for this statement? Because if there is an electronic cash register or electronic credit ledger, all those things, there is a backing in the rules. Rules specify the format and everything. For this, is there any backing of the rule? There is no legal backing, I would say. I would say this is a tool available. This is an automatic tool available by the government, by the portal to enable the taxpayers to correctly ascertain the reversed and then reclaimed amount. And also, I would say this is a beneficial measure for the government also, because they want to know what is the amount that is the amount that is eligible amount that person is keeping it as pending without claiming. So this amount is also known to the department by this electronic credit reversal and then reclaim statement. So I would say more of a benefit to the government than a benefit to the taxpayer. See, everybody should go through this circular number 170. Because even some of the big companies having a turnover of 200 crores, we found that the circular has not been followed in spirit. So they have been still following that old system of they are putting the ITC 4A5 as per their books and then reversing. No, it is not required. So why this is there? See, para 4.2 of the circular, I have reproduced that exact wordings because this is very, very crucial for understanding and then filling of the GSTR 3B. So what it says, it may be noted net amount available as per table 8C of the form GSTR 3B gets credited to the electronic credit ledger. So this is the amount I told. So what is the amount coming in 4C is the amount that is credited to the electronic credit ledger of registered person. Therefore, it is important that any reversal of ITC or any ITC which is ineligible under any provision should not be part of net available ITC. So what they say, ineligible ITC should not go into electronic credit ledger. So this is very, very crucial, important. So ineligible amount should not enter into the credit ledger. So I have taken it, after that I will reverse it. You can say that, but the primary main or the primary requirement is the ineligible credit should not enter into 4C. So this is a very, very important. This is a what that is stressed in the circular 170. So whatever the ineligible amount, you have to be put it in the 4B, 4B1 or 4B2. You have to say 4B1 is a permanent, 4B2 is a. So What is the change? What is the change that is contemplated? What is the change that is contemplated? Again, I am putting that exact words from the circular, because most of us do not go by the circular in full words. So they say it is pertinent to mention that ineligible ITC, which was earlier not part of the calculation of eligible ITC, is now part of the calculation of eligible available ITC. So ineligible ITC also now becomes part of the auto-populated amount in 4A. So from the GST 2B, it is getting auto-populated in 4A. So that is the stress point. See, earlier I told, so earlier we have to give it 4A5. So 4D1 earlier contained the details regarding 17.5. So you will be giving the ineligible ITC in 17.5 in 4D1, but you will be calculating only the eligible amount in 4A5. This situation has been completely changed. So kindly note, this is a change. This is the important change. So you now part of the calculation of eligible or available ITC, auto population. So what is populated, getting auto populated from the GST 2B is both eligible and ineligible ITC or available ITC. So we have to feed the eligible ITC only, 4A5 prior to this change. So before this change, you have to feed only the eligible ITC, because eligible ITC automatically you have to feed in 4D1, 17.5. Now this is changed. Now we have to feed the entire eligible ITC and ineligible ITC in 4A5. So all other ITC, 4A5 is nothing but all other ITC. So all other ITC you have to feed in the GST 3B. What is the amount to be filled in table 4B1? 4B1, already we have discussed about it, so I'm not going into the detail, because it comes in the circular. I have put it again. Reiterate what is the amount that should come in 4B1. So circular says registered person will report the reversal of ITC which are absolute in nature and non-reclaimable in 4B1. So this is the wordings given in the circular. So permanent reversal has to be given in 4B1. So this is an important aspect that has to be taken, how you are filling. So even some of the companies having huge turnover, they still go by the method of taking the ITC as per their books and then they are reversing. No, everything you have to go by GST 2B and then from there you have to reverse it. So I used to say, now the starting point for the calculation is GST 2B only. So they use the word registered person for 4B2. 4B2 is a report, exactly wordings. Registered person will report reversal of ITC which are not permanent in nature. We colloquially say it as temporary reversal and can be reclaimed in future subject to fulfillment of conditions. So fulfillment of conditions. So this is 4B2. So 4B2, 4B1 they give the sections, but 4B2 they don't give the sections and all. So we have to search for it. What are the non-permanent nature, non-permanent ITC reversal that are taking place? So if we go through that, rule 37. So non-payment to consideration. So this comes from the second proviso to section 16(2). So if the supplier is not making payment within 180 days of the date of the invoice, then this ITC has to be reversed with interest. So whenever you make the payment, you can avail the ITC again. So there is no time limit for re-availing the ITC once reversed. So this is the amount that has to be reported in 4B2. This we call it as the circular says reversal which are not permanent in nature. We colloquially call it as a temporary reversal. So for 16(2)(b), see, one of these conditions for availing the ITC is which the recipient should have received the goods or services. So this is an item that has to be reversed. For example, you are ordering the goods from Mumbai. So the truck is starting on 30th. but you will be getting in Coimbatore, you will be getting the goods in the next month only. The supplier might have put it in the previous month. Say it is a month of January. He will be putting it in the GST 1 of the January. So you will be getting in the GST 2B of the January. But can you take the ITC? No, you have to reverse it. Because you have to reverse it because you have not received the goods in the month of January. So this is a temporary reversal. You can claim it in the next month when you get back the goods, get the goods. So this is the amount that has to be. So now 16(2)(c), when the supplier has not paid the amount, so supplier has not paid the amount, you have to reverse the ITC. Now that ITC time limit is up to 30th November. You will be getting a intimation who are all your suppliers who have not filed or paid the tax. So if you are going to reverse it by 30th November, all those amount that you have received in intimation, there is no need for that. For that, interest need not be paid. There is a separate rule. Rule 37A has been introduced for this purpose. So here, just a deviation. When supplier defaults, I have made the payment. Should I reverse it? These are all some of the cases that are happening. Even now there is a decision where they have read down this section 16(2)(c). These are all there. But now there is a section 41 subsection 2 which specifically requires you to reverse that ITC when the supplier has not made the payment. So this amount, whenever he makes the payment or whenever he files the 3B and then pays that amount, you can re-avail that credit. So this amount is also not a permanent nature. So temporarily, you have to put it in the 4B2. So this is the item usually that comes in 4B2. So electronic credit reversal and then reclaimed that was available in the portal from August 2023. So August 2023, this was available in the portal. Then what happened to that opening balance? So there was an option was given for giving the opening balance, and then here I have given the time limit as November 23. Then after that, subsequently they extended it for 2 or 3 times. See, for example, I might have reversed it earlier, but I have got the figures, but that should be claimed in future. So the government wanted, or the option was given to feed the opening balance in electronic credit reversal and then reclaim statement. The date is given only with reference to the first notification. Now this window is closed. Now you cannot give the opening balance. I had unclaimed for the year 22, 21. I have claimed and then reversed it, but I have not claimed it. Any reason? Now you cannot do that now because the option for opening balance window has been closed. So the details are taking from the 4B2. 4B2, the electronic credit reversal and then reclaim statement automatically takes the figure given by you in table 4B2 and then 4D1 of GST 3B. So you have got the only who had the option only to feed the opening balance, but for the rest of the period, it will be automatically taking from the GST 3B. So giving the details in GST 3B, these details of paramount importance, I would say. Why negative balance? Why negative balance comes in this electronic credit ledger? Why this negative balance? Because in the initial time, they gave the time up to November to give the negative, give the opening balance. So you will be reclaiming it. So that reclaim amount will be given by you in 4D1, but you might not have given the 4D opening balance. So due to this, your reclaimed amount will be more, and then you will not have been given the ITC. So the portal allowed you for the negative balance without any opening balance. You can take, that can be a negative balance in electronic credit and then reversal statement. And also sometimes by mistake also some of the registered person reclaimed more than what is the amount reversed, temporary reverse. But the system showed the warning, but it allowed the taxpayer to go in the negative figure for the electronic credit reversal and then reclaim statement. So this is the negative balance that is coming in this register. So in similar manner, there is a RCM liability and then ITC statement. So similar to electronic credit reversal and then reclaim statement, that is for the outward supply and then tax liability. For this RCM liability also, they introduced from August 2024 a new statement, RCM liability ITC statement. Both are available in the both the statements are available in the portal. You can easily view it. So from August 24, what is the reason for this statement? Government wanted to ensure. See, you can make the RCM payment and then you can take the credit. See, one of the difference between the earlier or erstwhile service tax regime and the current GST regime is, earlier service tax regime, you have to make the RCM payment in 1 month. You have to claim the ITC or earlier SENVAT credit in the next month. Now, you can pay the RCM in 1 month and the same month you can take the ITC also. So this is one of the change that is come into place in the GST regime. So RCM liability you will be showing in 3.1D of GSTR 3B. So this is the outward tax liability that is in table 3. So in 3.1D you will be showing RCM liability. You can claim the RCM as ITC under 482. 482 deals with import of services. For import of services, you have to pay GST, and then due to the reverse charge mechanism specified in the import of services notification, IGS notification, due to that, you can claim the ITC also for that. Then 483, it is for other reverse charge. For example, GTA, advocate fee, or rent paid for unregistered person. These are all the inward supplies that attract reverse charge. So you can claim ITC for this, but these things should not be more than the amount of ITC payable by you as reflected in 3.1D. To ensure this only, this RCM liability ITC statement has been given in the portal. Though they say it is for the assessee or the registered taxable person to ascertain the correct liability, it is more of a control mechanism for the department to ensure that the registered person does not claim a higher ITC as compared to the amount paid by him in table 3.1D. So in this background, this is a background for electronic credit reversal and then reclaim statement and RCM liability and then ITC statement. Now, what is the issue with this? What is the issue? So this issue, what we wanted to highlight is GST and advisory dated 29th December 2025. So now they say negative values or availment of excess ITC over and above available shall not be available in both the ledgers. So electronic credit reversal and then RCM liability and then that register, negative values will not be allowed in future. So amount reclaimed, so 4D1 shall be lesser than or equal to closing balance and then amount of ITC reversed. So that should be 4D1, you will be reclaimed amount that you will be showing. One tax period you may have reversed and then you will be reclaiming it in another tax period that you will be showing in 4D1. So what is shown in 4D1 cannot exceed the opening balance in the electronic credit reversal and reclaim statement plus the current month reversal. So more than that, you will not be allowed. So the portal itself will block that amount of excess. So this is an important aspect. Then RCM ITC, that is 482, import of services and all other RCM payment shall be equal or equal to the value declared in 3.1D. So this is one of the aspects to ensure that you do not claim the ITC for RCM more than what is the amount that you are going to pay in 3.1D. So this is an advisory. So you will not be able to do that. If there is a existing negative balance, you have to make the payment. You have to make the payment or you have to adjust it in the ITC. So you have to adjust it in the ITC. For that mandatory reversal of excess ITC, negative balance. So that has to be given is more than is made in table 4B2. You have to make that adjustment. And the same thing applies for RCM liability and then ITC statement also. So this is the important aspect. So what is the, see, because after some of them are blocked Without this, they did not allow some of the registered person to make the payment or file the GST 3B. So for that only we planned it for the earlier month itself, but could not because there was other topics were there in the important topic. So we thought we shall enlighten the audience in the current month. So another important aspect that has to be kept in mind is purchase return and then ITC reversal. So purchase return and then ITC reversal. See, you buy the goods and then at the time of purchase, you avail the ITC. But after that, you find there are some defects. So you return the material to the supplier. So at that time, you have to reverse ITC because you are not using the goods and then you are sending back. There is a natural reason that you have to reverse that ITC. So there are two issues coming in that. How to put this or how to calculate this or where to and then when this purchase return ITC should be reflected. Two issues. That is when the ITC should be reversed. Purchase return. Suppose you are reversing or how the ITC. These are all the two aspects that has to be seen. How the or when it should be reversed. These aspects are crucial importance. When ITC should be reversed? Why this question arises? As soon as the goods are returned on my own valuation, on my will, can I reduce the ITC or should I wait for the credit note from the supplier? In my opinion, it is better to wait for the credit note to appear in the GSTR 2B. Because if you are going to reduce on your own will and then subsequently, suppose you are returning the goods in the month of February. So he doesn't give the credit note in the month of February itself. The supplier gives in the month of April. So whenever the credit note comes in IMS, either you have to accept it or you have to reject it, or you can maximum keep it pending for one tax period as per the recent amendment. So the IMS, either you have to reject it because you are reduced earlier. Then if you reject it, then it will be added to the outward tax liability of the supplier. So to the avoidable issues will come. For that, it is better to wait till the credit note appears in the GSTR 2B. So this is as soon as he gives the GSTR 2B, when you accept it, automatically your ITC will get reduced. If at all, if he is not going to give at the end of the year, then it is better you reduce it on your will. So how the purchase return should be reversed? Purchase return, it is a permanent reversal because at that return, once goods are returned, you cannot claim it back unless he gives a fresh invoice and everything. You cannot claim that ITC. So it is a permanent reversal, which is as per the circular. 4B relates to ITC which are absolute in nature and then not reclaimable. Should we put it in 4B1? Because this purchase return, you will not be entitled to get it back. So because it is a permanent nature, should you put it in 4B1? No, absolutely. That is not the correct practice. The all other ITC, that amount, suppose that a month you are getting a ITC for say 10 lakhs. Then there is a goods return ITC for 1 lakh. You put this 9 lakhs only in 4A5. Don't put 10 lakhs in 4A5 and then 1 lakh in 4B1. Don't put like that. The ultimate result, amount that is going to be credited to my electronic credit ledger, 4C, is going to remain the same. Yes, you are right. That is right. Because the amount that is going to be credited to electronic credit ledger through 4C, the amount is going to remain the same. But this is not the correct practice. You have to reduce it. The credit note amount ITC for the goods return should be reduced in 4A5 under the all other ITC. Why? Why this type of adjustment is required? The question arises, why I should not show in 4B1? Because the amount that I am going to get credited to the electronic credit ledger is the same. Whether I am going to reduce it in from the all other ITC or if I am going to put it in 4B1 so that the department will know, so it will be reduced. No, 4B1 you don't put it. reduced from all other ITC. Why? Why? See, we are looking it from the point of view of annual return. From the point of view of annual return. So, in the annual return, table 8A is a auto-populated from GSTR 2B. This is amount that is auto-populated from 2B. So, this what is populated in 8A is the amount net of credit note. Net of credit note. So, the amount populated in 2B is compared and then the difference is arrived at. So, what is the amount that you have taken in GSTR 2B and then the amount what is getting auto-populated in table 8A is compared, and then if at all any difference is that it is arriving at. It doesn't take into account your 4B1 figure. So, this only there should be a congruence, there should be a proper reconciliation in table 8A of GSTR 9. For this purpose, it is better you put the purchase return ITC for the credit note in the all other ITC. You reduce it from 4A5 and then there will not be any difference in table 8D. So this will be from the point of view of GSTR 9 for a practical purpose. So these are all some of the thoughts that I thought we shall share with you. Thanking you one and all. Now you can put your queries in the chat box. Thanks for being present in the webinar. If you got any queries, kindly put it in the chat box. Let's do. Same. See, one of the query raised is RCM paid as per section 9.3. Is it required to reverse as the common credit under section 42? See, if at all see, for example, if it is a rent for which you are paying reverse charge, and then if it is relates to taxable and the non-taxable, naturally you have to reverse as per the rule 42. See, you are right. Circular 241. See, circular 241, particularly they are mentioned for the purpose of the vehicles. For the purpose of vehicles, we can say that we can entitle for that. But since that wordings used in the section is on the receipt of the goods, because they say it is a deemed receipt. So these are all the areas. But it is better to take the ITC whenever it gets, because from where the title passes. So these are all the areas. Once the material dispatch is getting from the party, then that is the issue. So that are given, but you can take, but as a safe, it is better to take the ITC once you get the material. Yeah, hotel bills block credit. See, hotel bills, see, stay, for example, food and beverages is only block credit, but if it is a room rent, you can take the ITC. But due to the place of supply rules, you can take the ITC in the place where you are having a business. So that is, I am having a registration in Tamil Nadu, and then I go to Delhi for a business visit. It is purely for business visit. It is not for any other purpose. But due to the place of supply provision, the place where the immovable property is situated is the place of supply. So the hotel where I am staying, though I am giving my GST number, they will be giving their SGST, CGST only. So I cannot take the ITC for the same. But if it is within the same state, say I am in Tamil Nadu, I am going to Chennai for a visit. For that, there I am staying in a hotel. So they are giving that bill, then I can take that ITC. See, one is purchase return or rate difference. We are doing the reversal, but may or may not be accepted by the supplier. Can we do the reversal? Actually, as a matter of precaution, you can do that. But the basic logic is the person who created the document and then who fed it in the GST portal. So the tax invoice is the basic document. So whenever he is filing it, that amendment, whenever there is a rate revision or the goods return, he has to amend the return or amend the invoice. So for this purpose, only he can do that. If you are going to do that on your own motion, so the department will be very happy because you are going to reduce your ITC eligibility. So it is not going to affect you in any way. So you can reduce it. But it is better to get it amended from the supplier. That is because if the supplier is going to put a credit note again, naturally again you have to reverse it. You must reverse. That is what I told you. For the purchase return, it is better wait for the supplier to put it in his GSTR 2B, GSTR 1, so that you will be getting the credit note in GSTR 2B. Till wait that time. The similar thing arises for the rate revision also. Under rate revision also. If we pay RCM for sir, hotel business, restaurant, it is an entire ITC is blocked, so it becomes an expenditure for you. See, one of the query raised is that a registered person is engaged in the restaurant services, hotel services, supplying of the food in the restaurant. So whether can you take the ITC for the RCM payment? As far as the hotel service is concerned, it is only flat 5%, 2.5% CGST and then 2.5% HGST. One of the condition is you should not take any ITC. So naturally, even if you make the payment in the RCM, you cannot claim the ITC. See, the client claimed ITC without reporting the corresponding opening reclaimable. See, opening amount you cannot get it now. Opening reclaimable, now that the expired period is over, now you cannot get it. You cannot get it. Sir, as per rule, which document should we raise, the debit note or credit note? See, this is one of the common mistakes that we are finding it. Okay. See, they raise the debit note. Through the debit note, they will be making the adjustment. So debit note is not the document. Debit note by the recipient. Recipient receives the debit note and then they are putting it in the GSTR 1 or anything. See, that the debit note is only for the any price increase. That also has to be given only by the supplier. So debit note or credit note, which is the first, is not the criteria. So the person who has created and then who has put the tax invoice in the portal only can raise a subsequent debit note or credit note. The recipient cannot raise a debit note and then he cannot adjust the value. So this is important aspect that has to be. Thank you. Thank you for the participant. Your participation is always an encouragement. See, we have got the Zentax portal. Zentax portal, we have got a free auto population of the notices. See, sometimes we get the notices. People do not see the notices. Ultimately, the bank attachment order passed. So kindly make use of this Zentax portal so that you will be aware of what are the notices that are coming into the your GST number. So with this request, and also if you have got any doubt, kindly send it to our mail ID. We will be able to reach it to you. Thanking you one and all for being present in this webinar. Thank one and all for your participation. Thanking you.